new economic policy 1991 that was the comprehensive Indian government in 1990 check about the new economical policy marked a transform shift in the Indian landscape, steering country from a closed to centrally planned economy to more liberalized market. Introduce a severe economical crisis and aim at the stabilize the economy, enhance the efficiency and integrate the India. Key component of this policy is the LPG collective known the LPG. This reform is dismantled the license Raj. License Raj was dismantled, reduced the public sector dominance and opened the avenue for the foreign investment FDI, laying the foundation for the rapid economical growth. New economical policy comprehensive set economical reform under the Prime Minister Narasimha Rao (PV) Narasimha Rao and former finance minister that was the Manmohan Singh, known as LPG reform. So the phase the balance of payment, foreign exchange reserve and mounting fiscal deficit, recognizing need for the structural change. The policy aimed to reduce the government control over the economy and participation, private sector participation, attract the foreign investment. By liberalizing trade, deregulating industry and promoting privatization, NPP to enhance the productivity and economical growth, integrate the India. New economical policy was driven by the severe economical crisis marked by balance of payment and high inflation, fiscal mismanagement and global pressure. So fiscal mismanagement, excessive public spending and the growing subsidies led to fiscal deficit. Internal debt that was 35% to 53% of GDP and 1985 to 81 government finance. Inefficient PSU public sector undertaking suffered from the losses due to the bureaucratic inefficiency, lack of autonomy, poor productivity, low growth, 3.5% with industrial output stagnating and falling the generate the employment. So balance of payment 1991 India faces severe balance of payment crisis, foreign exchange reserve plumbing level sufficient or only few weeks. So the globalization, competing the economy like the China and Asia nation liberalized earlier and outpaced India's growth, pressuring India to reform and integrate with the global market. Gulf War was also there. Inflow of the foreign remittance from the Gulf War declined and economical situation. Golden page to avoid the sovereign default. India placed 67 ton of gold as collapse for the emergency loan and signaling the severity of the crisis and urgent need for the structural reform. So objective was to boost the private sector, attract FDI and integrate the economy. Stabilizing the economy, first of all control the inflation, open up the economy, investment and markets and boost the private sector, attract the FDI and enhance the efficiency. New economical policy was focused on the LPG and attract the FDI and modernizing the economy. Fiscal discipline to maintain the fiscal discipline, limiting the non-plan expenditure, introducing tax reform, monetary policy that was the current account deficit and indulging it should be reduced to curb the import credit cost, new tool for the long term security and treasury bill, banking sector liberalization, autonomy, set deposit interest rate and decide maturity terms, regulatory control, fostering more competitive and flexible banking system. Trade policy reform, 18% boost the export import restriction for exporter eased and capital goods imports were liberalized without prior government approval. So trade policy reform. Industrial policy reform, it was public sector and private sector was allowed in the key industry, boosting the competitions, reforming the MRTP and small industry, remove the approval required for the expansion and that was the bigger companies. Foreign direct investment was before 40% to 51% and that was promotion board. Investment Promotion Board was created for the first check for investment clearances, and there was a Investment Promotion Board. So, Indian new economical policy introduced 24 July, and it was built a core LPG transformation. Liberalization involves relaxing the government regulation restriction economy to encourage the private enterprises, increase the efficiency. Abolition of industrial licensing requirement were eliminated. Freedom to expand the produce businesses no longer needed government approval to expand capacity. De-reservation of the public sectors and open for the private player also. Financial sector reforms entry of the private banks, ICICI, HDFCI, trade liberalization and the tax reforms also there. Privatization like disinvestment of the PSUs, non-strategic public sector undertakings, loss making. Notable example of lots of there which was in loss making. Strategic sale, instead of just selling, we go for full of control. Company was transferred like Modern Food to Hindustan Unilever, and autonomy to profitables PSU. So introduce the granting financial autonomy to profit making and reduction in reserve sector. Industrial reserve for there was a 17, now it's only 3: defense, atomic and railway. So you know about this: defense, atomic and railway. Public private partnership to it's in infra airport highway to improve the efficiency. Globalization integrating the domestic economy withdraw the increase the trade investment technology. And currency convertibility, that was in 1991. Full convertibility capital account remains the pending still, but partially convertible current account and capital account remaining. So trade liberalization, exim policy 1992, simplified export import and a peak import tariff 150 to 50%. Foreign direct investment automatic route was given for the manufacturing and all that. Promotion of export, that was special economical zone, export import exim policy. Joining the WTO in 1995 and it trade rules with the global standard. New economical policy that was significantly transformed to leading to the higher growth, increase of foreign investment, expand the private sector and greater global integration. Economical growth that was average 6 to 7%, now double digit के लिए बोला गया and projection was 6.2%. Increase of foreign investment, that was 97 million to 81 million. Expansion of the private sector, that was driving industrial modernization, innovation, job creation and IT telecom. Improve the foreign exchange reserve, that was 91 record, that was 704 billion, providing a strong buffer against the external shocks. Reduction in the poverty and income inequality को reduce करना. World Bank report India successes 170 million people out poverty. Integration with the global economy, WTO and G20. New economical policy, industrial growth has been lagged behind, so overall growth, gross domestic product in the post reforms give reason how the recent changes was there. And this is about the industrial policy.